Hello traders and Market Club members everywhere. Well, here we are at the last day of trading in the first quarter, and it's been a rather flat quarter in many ways in terms of some of the movement in the indices, mainly the Dow and the S&P 500. The Nasdaq was of course a little bit better. But let's get started with our 52-week high rule on a Friday. We were taking a reverse position here and going short this stock. This is SanDisk, the symbol SNDK. We shorted this market at 64.60. We closed out the position today at 64.20 for a very small profit of 20 cents. Next stock we took was BioMarin. Now this is a long position. We went long on the close right here, and we took our position off today at 28.81. That was a loss of just 12 cents. So the key thing is be disciplined. Take the profits, take the losses no matter what. This is Kraft Food, another position we put on at 89.12. We exited this position today at 89.62. This is a profit of approximately 50 cents. Now again, these are all very short-term trades for this one particular discipline. I'm going to share with you something afterwards and tell you about that too. So we made 50 cents here. Next stock we traded was NVO, Novo Nordisk, and we got long right here, and this was at approximately 53.83, and we exited at 53.58 for a loss of 25 cents. Again, these are not big numbers at all. Next stock was Essentia. We are long from 93.90. We exited that position on the opening today, and that was 94.01 for a profit of 11 cents. All told, we made about 44 cents on the trades that we did. Nothing to write home about, admittedly. But here's the key thing. I want to go to the next market now and show you what I mean. Here we are. We have a mixed picture in the indices. And if we look at the Dow Jones, you see that we have our trade triangles are definitely mixed. Now, had we had all of our trade triangles either green or red, those trades that we showed you in the 52-week highs, 52-week lows would have worked out much better. We've got this conflict. That's why you have some of those 52-week highs making money and some not making money. You may want to wait until we see a confirmation either the weekly turns green or the monthly turns red. We'll have to see how that plays out. Generally speaking, we're right above the 50 line, on the 50 line I should say. You can see pretty much if this is from the beginning of the year. You can just take a trend line to sort of go like this, and you can see really the market's done nothing for a year. We've oscillated around that line, but not much else. Moving on to the Nasdaq. The Nasdaq's a little bit better. If you look just here, you can see that we've had more of a situation where it has actually improved on the year. That's pretty much where it is, where it started, and we're up, of course, to these levels right here. So again, this is something I think is a little more positive there. But again, we have this mixed metaphor with the green monthly triangle and the red weekly triangle, indicating a trading range, and that's the key. We're still finding support at the 50 line, which is a good thing. This is the S&P 500 cash. You can just see quickly, it's pretty much really just flat, maybe a little bit higher for the month, or for the quarter I should say, but not much else. 50 is a trading range when you have a minus 50, and we're just flat on the RSI 50 line. Again, still saying it's potential for it to go higher, but also it may be changing direction. Now this is gold. We have a big report tomorrow on gold. You can see all of the trade triangles are down, and if we just go from this level here, if we just go from this level right here, you can see really we've had some huge swings both on the upside and the downside. You can just see really quickly, huge move up here, big move down here, and now we're just moving like this. So again, we're pretty close to the 50 line. Watch that very carefully. We have a special report on gold tomorrow. You won't want to miss that because there's something very interesting I want to share with you. Silver actually is performing pretty well, actually better than gold, and here's why. If you look at let's just take where we are here, run this up, you can see we're actually had similar movements to gold, but it just actually is performing a little bit better. Plus you've got the weekly and the monthly green. Only the daily is red. Now that actually means you're out of the market waiting for this particular indicator to turn green. When that turns green, you want to be long silver. The Eurodollar, you can see this has just had a constant loss against the US dollar, minus 100. The trend's still very strong. We're below the 50 line. It looks like it wants to go still lower, or at least test the lows here below 106 and towards 105. Crude oil, again, this market has really sort of lost favor. It's had a big move down. The Yemen situation, obviously the Arab army and so forth, has exacerbated what is a difficult situation anyway, but as long as Saudi Arabia keeps pumping oil, it's going to be very difficult for this market to go higher. But again, we're very close to the 50 line. Watch that closely. It could be a big key for next week and certainly in Q2. I think there's going to be some great markets in Q2. I want you all to keep watching our videos, of course, but I also think there's some great opportunities in some of the markets we've just described. So, hey, I'm Adam Houston. I hope you had a great Q1. Here's to an even better Q2. I'll see you all tomorrow with that special gold report.